Hi, my name is Pat O'Connor. I'm the broker owner of the Veritas Real Estate Group, and today I want to talk about 40-year mortgages. 40-year mortgage for conventional non-conforming loans have been around for a while. Non-conforming means in this case that they are not 30-year or less loans, and that their maximum loan amount is higher than the underwriting standard for conforming loans. And right now that's somewhere in the middle 500,000 range. It typically goes up every year when the market is increasing, that the maximum loan amount for a conventional loan increases. And so the 40-year loans, from what I've read, the current ones that lenders are doing, and not all lenders are doing, but they're 900,000 and above, and they tend to have a large down payment and high credit score, and a lot of them are being used as a way to refinance, to get out of financial trouble, to avoid a foreclosure. With a 40-year loan, the interest rates are going to be higher with these conventional non-conforming loans, but it's spread over 40 years so that the total monthly payment will be less than with a 30-year loan. Overall, the lifetime payout is going to be more, but because of the extra 10 years of interest. But most people are looking at a monthly budget, and that's how they live their lives. They don't look at what am I going to pay out in the whole 30 years if I keep the home for 30 years. So these conventional loans are here. They're being used to help bail people out of financial trouble, help people keep their homes. So what's new is that it was announced last week that the government-backed loans may also be doing a 40-year mortgage coming the end of this year. Maybe October, maybe November, they'll start. These are the FHA, VA, and the USDA loans. USDA is United States Department of Agriculture, and these are loans for sparsely populated, lower income people. They're also called farm loans because they tend to be in rural areas. So what will happen, what we'll have to wait and see is, will these loans be like conforming loans? Will they be allowed to keep the interest rate at or maybe just slightly above the 30-year term that now exists? Is it really going to be any riskier for the lender? The government loans already receive financial assistance if the lender is going to lose money on a short sale or a foreclosure. The conventional lenders don't have this assistance. They have private mortgage insurance that covers 20% of their losses. If there's a short sale or foreclosure and they lose money, but that's it. They don't receive government assistance. FHA loans are 100% insured by the U.S. government. The lender who loans the money for the FHA loans is guaranteed not to lose any money. It's 100% insured. And then the VA and the USDA have, I think it's maybe 25% insurance guarantee that the government will pay them back for those losses. So what happens is may revolutionize the mortgage industry if there's no difference when these FHA, VA roll out with a 40-year term. If there's very little difference between the interest rate for a 30-year loan and a 40-year loan, but your payments are $100 or more less a month, most people, I think, may end up choosing a 40-year term just for the monthly payments. In the United States, people tend to move every 7 to 8 years. That is our national average. So they're not worried about holding the home for 40 years. That's not a concern for most people. So it'll be interesting again to see what happens this fall, if in fact 40 years becomes a new standard. I don't know. It'll also help a lot of people if they roll them out for lower income loans, help people to avoid foreclosure, avoid having to do a short sale, which can screw the credit up for a few years. That if they can refinance into a 40-year term, and maybe just that $100 a month difference in a payment may be enough for them to save their home. So it'll be exciting this fall to see what does happen. So stay tuned. I will let you know. Thanks. Bye.